Kristina, let me start with you. What we saw with the equities, I say it was basically a good week for equities. They've clawed back what they lost in September, basically. What's driving it?
About earnings, right? We went into the third quarter with a lot of fears, and they have not been realized thus far. In fact, what we've seen is better positive earnings surprise than the average that we've seen. And certainly it's been helped by some high profile earnings reports that have driven up the averages for the overall market. But this is certainly a good environment thus far. Now, only 23% of companies in the S&P 500 have reported thus far, but it's been a good season so far.
So, Rick, what about it? I mean, we have seen outperformance thus far, at least about a quarter of the way in on the earnings. Are there any clouds on the horizon? Let me ask about inflation specifically, because when those break-evens spiked up around Thursday, late Thursday into Friday, the equity market sort of took a hit. Should we be worried about what's going on with the inflation prospects?
So, I mean, I think I think inflation is a tricky concept because it's, people focus on one number. There are a number of cross currents. The labor dynamics are real. I mean, it's the hottest job market I've ever seen in history, and it's not going away anytime soon. There are not enough people. I mean, look at the amount of hiring that's going on from Amazon, the Walmarts, from the biotech companies, technology generally. So labor is going to continue to accelerate. The cost of labor is going to continue to accelerate. And then energy, some of the commodity infrastructure, it's hard to get the CapEx and to rebuild that in a short period of time. So some of those stresses are real, and the markets are going to focus on it. And then how the Fed addresses it, I think, is going to be important. And to hear what Chair Powell said, and part of why you're seeing the yield curve do what it's doing, and part of why inflation came off, the break-evens came off a bit today, is you've got a Fed, and by the way, not just a Fed, a Bank of England and some of the emerging market central banks that are going to try and address it. So it's worth keeping an eye on. It's definitely one of the risks that are out there. I think a lot of it, David, is the fact that it's coming from supply more than anything else today, which is a really big deal. It's inventory drawdowns and the amount of supply not being ample enough for a lot of products that's driving price pressures higher.
So, Kristina, what about that supply problem? We hear about it every single day in one industry or the other. Are we seeing it show up in the earnings at all at this point? Is it, again, a cloud on the horizon for the future earnings of some of these companies?
Well, it's certainly showing up, but mostly it's about worrying about the fourth quarter and beyond. And so already what little guidance we've gotten for the fourth quarter is relatively negative. And I think that's likely to continue. Supply chain disruptions should be expected to last for a while. I mean, we've gone through an extraordinary economic disruption. This pandemic has caused all kinds of issues, and they're not going to be worked out overnight. So we have to expect that this will persist for months.
So, Rick, what about the pandemic? I mean, we can't get around the pandemic. It is the looming issue out there. But is it an upside risk or a downside risk for corporations and corporate earnings at this point, and markets for that matter?
So, I would say, first of all, the anticipation is that we're largely on the backside in terms of the real stress around COVID. Hopefully that is the case. There is still, in areas like transportation, leisure, hospitality, there is still, some concerns about how quickly the people are willing to come back. But I would say generally that we are on the backside of it, and you're seeing, an economy, by the way, that operated extremely well through it, and that is flexible enough to adapt. So it is clearly one of the big risks. I think you said earlier in the show, China is certainly a big risk. And so there are definitely some things to keep your eye on. That's one of them. But I think at the end of the day, I think we're seeing an economy that's flexible, adaptive enough, with enough ingenuity and innovation that the economy generally will work through it today, assuming it's not a significant outbreak.
Kristina, Rick took us right to China, which is something I did want to ask about because we were surprised, delightfully surprised, that Evergrande at least made that $1 bond payment. People were wondering about that. At the same time, we did see housing prices in China come off for the first time in 6 years. How big a risk is China, or is there an upside surprise potentially there?
I think there is upside potential. What we keep hearing over and over again, this mantra that China is uninvestable, says to me that there are some opportunities there, that there is some mispricing going on, and that if one has a long enough time horizon, if one is willing to wait this out, they could be very pleasantly surprised with China. Clearly, there are a lot of reforms going on, but I think we have a better handle on the areas of focus by China right now, and that certainly helps. And clearly, what China has done specifically with the property market has been somewhat calculating. When we think about Lehman and try to compare Evergrande to Lehman, I think it's incorrect, because Lehman was a situation where regulators were asleep at the wheel. This time we had regulators focused on improving the situation in the property market and creating casualties like Evergrande.
So, Rick, I think it's fair to say, you might well say, you can't get around China if you're an investor today. You got to deal with it one way or the other. Right now, do you think the risks in China are greater today than they were a year ago, less, or about the same?
So, listen, I think the uncertainty is higher. I mean, particularly you've got an economy that's decelerating pretty quickly. And, our sense is that most of that is temporary through the third and maybe into the fourth quarter. So anyway, that is higher. The regulatory dynamics that have played out, the uncertainty around, gosh, you've seen it in gaming, you've seen it in education, and some of those, and the property sector, some of the reaction function has been unpredictable. And so, is the risk gone up? I think so. And I think general platitudes of I'm going to invest in it or not invest in it, or, particularly not invest in it, I think is an extreme. I think as Kristina said, you got to think about risk reward, how much, and scale your positions appropriately, and where do you have upside convexity? Some areas that it's just not worth taking the risk in China today. But I think having some patience where there's convexity to the upside. Listen, I think gave the number the other day. 26% of the unicorns in the world, real technology is developing in China. To be able to tap into some of that, with some patience and some staying power, I think makes some sense, even though we're at what is probably a riskier period of time for investing in China.
Kristina, one last one to you. Let's talk about risk back in the United States and talk about regulatory risk or tax risk. Here at the end of the week, it appears maybe they'll be able to figure out how to pay for all those things they want in Washington without increasing the corporate rate, instead having something called a billionaire's tax. Not sure what that is. Are the markets constrained by the threat of that tax, and therefore might there be upside if it goes away?
I think there is the potential for upside. I think at least some of this has already been priced in. There has been an assumption that we're going to see taxes go up. And now we're being presented with such a level of congressional dysfunction that investors and corporations might be able to have their cake and eat it too.
Rick, do you agree?
Listen, I think there's a number of things you've got to focus on today around some of these dynamics taking place, and like I say, I think each one of them needs to be taken independently, because there's a lot of idiosyncratic dynamics there today.
Kristina, let me ask you one more, maybe an unfair one. What about these SPACs? I mean, we had a flurry of activity around former President Trump's SPAC. Is this really just market froth, or is there something deeper there?
Well, it's really interesting that you asked that, because not only did we see SPACs really have a week of wild popularity, but we also saw the same for cryptocurrencies. So I think it's certainly emblematic of some froth out there, but I also think it's clear that investors are looking for returns and they're looking for risk assets. And that suggests to me that stocks have longer to run.